Thanks very much for being with us. And to start off with, Mr. Godrej, you have a lot of companies within this space struggling with volumes on ground. What is your observation of demand on rural as well as on the urban side?
Well, we had a good quarter in September. Our top line grew 10% and our net profit grew 22%. I think among the FMCG companies, our growth rates both on the top line and on the bottom line were about the best. And we see, of course, there is some stress on demand, both rural and urban, but we think it will improve now that the general macroeconomic situation is improving. And of course, if GST is brought in very soon, that can make a tremendous change on the ground, and we think if once GST comes in, FMCG demand will grow very rapidly.
It's been a good growth of your EBITDA as well, and run us through whether or not it's been the international business which has contributed fairly significantly to your overall EBITDA growth, and is this likely to continue for GCPL into the coming quarters as well?
Well, our international business had a particularly good quarter, despite the fact that a lot of the emerging economies where we operate are under stress, both on the foreign exchange front and on the growth front. But our businesses have done very well, and we continue to expect them to do well. In India, though, if you take exceptional items out, our profit growth was quite good at 19%. Overall, if you take exceptional items out, our consolidated profit growth was up 37%.
Well, stand out for a lot of reasons, these numbers. Domestic double-digit volume growth, the performance across key categories other than soaps. Indonesia stood out as well. And Mr. Godrej, I was just looking at some of your sectoral performances. Indonesian business, margins have gone up to 24%. Constant currency revenue grew 10% as well. That must be very, very heartening. How much further can you take these numbers up to from Indonesia?
Well, Indonesia has done well, despite the fact that actually the Indonesian FMCG sector has shown about zero top-line growth. Our businesses have done well. We have introduced a lot of new innovative products in our Indonesian repertoire, and we have increased distribution. So overall, we are doing very well in Indonesia, especially taking into account how the competition is doing.
Certainly performing well for you. And, African revenue, maybe led by Darling, but I think I read two reports and they mentioned the word solid for the African performance. How solid was it? Can it actually solidify further, Mr. Godrej?
We had very strong growth in Africa. I now don't remember the exact growth in Africa. It was quite high. And we have been doing well across the continent. We have manufacturing operations now in about 7 countries in Africa, and we have done uniformly well.
What's an outlook on the competitive scenario in the sector and the kind of price cuts as well that you would perhaps be initiating, and whether or not market share is likely to be retained in light of this competitiveness?
Well, the good thing is that input costs are low because of crude oil prices being low, vegetable oil prices being low. Input costs during the quarter were low. They continue to be reasonable, so that gives us some benefit. But more importantly, our internal cost-cutting initiatives have yielded excellent results. Now, some of these cost savings we pass on in terms of more advertising, more promotion. Some of it we retain in terms of higher bottom line growth, and we expect this will continue over the next couple of quarters.
Pleasure as always having you with us. Thank you so much, Mr. Godrej, for joining in first on ET Now.
Good talking to you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.